Welcome to Naked Real Estate. My name is John Su. Today we're sitting here with Kaleem Khan from Dominion Lending Braco. And today's topic is, if you're self-employed, what's the minimum time frame you need to be self-employed for before you can buy your own home? And I think this is quite a common problem where people kind of, been working for many years and all of a sudden, not all of a sudden, and then you've been thinking about starting your own business, say it was a dream or a passion, and you start your own business, and then you're also expanding your family and you want to buy a home. And commonly what happens is you can't buy a home because you've started a new business. But I think there's a lot of, behind the scenes details that maybe you can buy a home. So Kaleem's going to give us some examples and some tips on, what's possible.
Okay, so thank you, John. So with this topic, there's many different ways of looking at self-employment and, well, how can I get a home? How will I qualify? There's so many different ways of looking at it. However, the basic rule, well, if you've been self-employed for 6 months as a minimum and you have 20% minimum as a down payment, we can go to a secondary market, meaning we can go to a subprime or a B lender, however you want to put it, and get your mortgage and get you a home. So that's one possibility. The other one is if you've been in the same industry for the past 20 years, but now you decide to go on your own and be self-employed, meaning you're going on a contract with the same employer, perhaps, or you're in exactly the same industry now.
An example.
Shell, as an engineer, or Shell, or I shouldn't just call them. It could be any of the oil and gas for one sales.
Okay, so you're an engineer with Shell, absolutely, and then you turn into an engineer consulting company.
Absolutely.
They'll approve you like this.
Well, when we say like this, you can get approved for it because you've been in the same industry but now you're self-employed, so we can look at that. So again, it comes down to the other strengths as well. But yeah, okay, it's a better possibility for you to get a mortgage even though you just became self-employed.
Okay, so what Kaleem is saying is, if you stay in the same industry and go into self-employed into the same industry, you have a much stronger chance of getting a mortgage like the regular people who are employees.
Absolutely,
right?
Absolutely. So that's.
But if you switch, say you're an engineer, and you do ballroom dancing every weekend, and all of a sudden you wanted to start your own dance company. Engineering and dance company are different industries, and pretty much, can you say that person can say, can't buy a home for the next 2 years, or?
Well, normally then you want to have two years reporting periods, and that's
2 years of reported income.
Yeah, so if you became self-employed a year and a half ago, or you have half a year of self-employment, and the year after you've got a year of self-employment in a new industry, that can be looked at. Normally you want to be at least 2 years self-employed to be able to be considered, with a down payment of less than 20%. So now you need to be insured, meaning you have to go to a regular bank and get CM Canada Mortgage, Housing Corporation, or Genworth, or Canada Guarantee involved in back-ending or insuring that deal for the bank for you. So normally, it's about, rule of thumb, they say is 24 months, usually.
And can you shed some light on the reporting order of when you file taxes, of how the banks look at it? So say year one, you make 100 grand. Right. And then year two, you file 50 grand, as opposed to when you start off a business, you make less the first year, you get 50 grand, and then the second year you make 100 grand. Because sometimes there's tax benefits to filing lower the second year, correct?
It can be. That all depends on your sales and revenue and whatnot.
So how do banks look at that order?
So the way the banks will look at it, if your most recent reporting period, which is, let's just say, last year, and you'd made less money, they won't average. They won't use the average of 2 years.
So if you report lower the second, so say for example, year one you report 100,000, and then year two you report 50,000. The bank looks at your income as 50,000, not the average of 100 plus 50,000, which would be 75,000.
That's correct. Yeah, absolutely. Yeah, you're absolutely correct. So be aware of that. If you're looking at for a home, have a plan, right? Put that plan together, and perhaps you only need that 50 to qualify. But that's something that needs to be
talk to with
the bank. Yeah, absolutely. Because the other thing that we want to, or the lenders will look at, is like, well, if you made 50 this year, or she made 50 this year, is the next year going to be 25 grand? So again, reasonability is something that we always look at when it comes to mortgages.
Okay, fantastic. Is there any other things that come to mind about self-employed and those kind of things?
Well, that's pretty much it. You know, keep your credit score high, or make, which in other words, make your payments on time.
Yeah, common
Keep that
sense
up.
stuff.
Yeah, common sense stuff. There isn't really anything out of the ordinary for that.
Okay, fantastic. Thanks, Kaleem.